It's yet another exciting and informative time with me on Armagate Radio Communications. The program is optimizing opportunities in the Ethiopian banking sector, and your anchor is my humble self, Abiodun Abari. Welcome, and thanks for being there. I trust your week has been going well, and I believe you're consistent in adding value to ensure transformational leadership in your organizations. We will continue to furnish you with the required impact necessary for you to optimally navigate the uncertainties and the risks in our world. We'll be right there by your side at Armagate, taking every step with you in your transformational journey to optimization. And this is what we've been doing for the past 17 years. And so far this quarter on this program, on this broadcast channel, we've been able to look at critical areas of the game changer in the Ethiopian banking sector. We're talking about the banking proclamation issued by the National Bank of Ethiopia in December 2024. Yes, critical directives as it concerns the issuance of banking license for the establishment of foreign bank subsidiaries, foreign bank branch, or the representative office of a foreign bank. Talking about issues of percentage holdings by foreigners, permissible. Right, extraordinary approvals for field banks takeover, foreign takeover, and employment of foreign nationals as chief executive officers and other senior executive office positions. Okay, so talking about foreign property ownership for banking business and non-banking business, and of course repatriation of salaries and reinvestment and repatriation of dividends earned by foreign nationals and so on. So, and of course, talking about the sweeping powers to ensure that the regulatory authority is able to insulate the entire financial system from the failure of the bank, and the adequate framework to ensure the autonomy and independence of the National Bank of Ethiopia from political influence. Talking about monetary policy being directed or dictated by the objective consideration of economic data. All this to ensure confidence in the banking sector and of course the economy. Definitely with all Ethiopian way of doing banking, we understand the justification for Prime Minister Abiy Ahmed Ali's economic reforms and the need to reform the banking sector in particular, being the lifeblood of the economy. And of course we'll talk about the larger need to ditch the existing unsustainable system of government dominance of the economy, and the need to adopt structural reforms to correct macroeconomic imbalances, so that competitiveness can be attained in critical sectors of the economy. Talking about moving to a market-dictated system by privatizing government on enterprises, cutting regulations, bureaucracy, and ensuring that sectors are opened up for private sector participation and also foreign involvement. So we'll talk about the critical role of banks in galvanizing funds and funneling same to various sectors of the economy. That's what was documented. So it is not surprising that the banking sector reform, as exemplified by the banking proclamation of December 2024, is at the heart of Prime Minister Ali's economic reform. And despite that, the benefits are accruing from transitioning for Ethiopia is not lost on us. We do not dismiss the concerns, the fears of the doubters, concerns of the implications for interest-free banking, amidst the calls for more room for Sharia compliant products, more Sharia compliant banking. Okay, so are those concerns valid? We also talk about the preference for fully addressing the internal issues. Okay, talking about economic issues, in issues about the debt issue, and of course the inflation. Okay, which I believe that the government has really done a good job. Okay, in taming the inflation and also ensuring that the debt is better managed and achieving that debt rescheduling. Okay, so but by and large, you also talk about the need to do more work, especially to be able to achieve a single digit inflation, and also more favorable figures as concerns the debts, all right, and the ratios that are relevant. And talking about the political issues and security concerns, the Tigray conflict, where you still have about over 3 million people displaced, and and of course over 15 million people still depend on our food aid. Okay, and we understand that due to the destruction, reconstruction will still go up about $20 billion. Okay, so those concerns might just be valid. Okay, but you also want to understand that how much longer can Ethiopia afford to wait? Okay, and remove government dominance, remove the regulatory services, targeted services. You even have AI powered services, better products and services, and there'll be services efficiency. So even for customer experience, and you have AI powered bots. Okay, so and of course there will be competitive rates on loans, and there will also be personalized loans targeting specific segments of the society. Okay, and we also talked about the innovative products, and which also involve the adoption of technology, and you have the benefits of modernization. Okay, so and that will also enhance real-time banking, and help ensure that the fraud is reduced to the barest minimum. Okay, so we have innovative products to being churned out as a result of foreign participation, like we talked about, and of course broader access to banking services. Okay, because there'll be like influx of banks, and so there'll be more branches and more locations and definitely more access. All right, so and we talked about the attraction too of foreign direct investment. Okay, that which we of course enhance the expansion of the economy, having more jobs be created. Okay, so we have an improvement in the infrastructure, because you have confidence being inspired in some foreign entities as a result of the participation of some foreign banks. Okay, so and of course you have foreign investors and bilateral and multilateral institutions to want to get involved, because that is some sort of an expression of confidence for foreign banks to participation in the Ethiopian economy. So that measure will also attract its own level of foreign direct investment. Okay, so and there are more options and more finance for the government and people of Ethiopia to improve their infrastructure, their roads, bridges, and their hotels, airports, railway, because more financing options for the economy, for the government and people, and Ethiopia, as they as they go about their priorities. Okay, and talking about enhanced financial inclusion, accommodating the unbanked and underbanked. Okay, talking about enhancing rural access, bringing in the disadvantaged groups, talking of youths, women groups, students, low-income entrepreneurs, artisans, people largely in the informal sector. Okay, so foreign participation of banks will bring about banks churning out products targeting the banked or the unbanked and the underbanked. Okay, and this will ultimately enhance financial inclusion. Okay, which we will start to focus on. Okay, as we want to look at those opportunities. Like I said, we'll look at the opportunities in a multifaceted manner. Okay, opportunities for investors. Okay, in the Ethiopian banking sector as a result of the banking proclamation, opportunity to get a good value for their investments. All right, and we want to start with that opportunity we want to call financial inclusion that is being created, is being enhanced by the seismic shift. They wanted the great turn Ethiopian banking policy. So we just defined, according to the IMF, that is access to and the use of formal financial services. Okay, access to and the use of formal financial services. And furthermore, financial inclusion actually involves ensuring that marginalized, excluded and disadvantaged individuals and firms have access to and are able to utilize adequate, affordable and responsible financial products and services, like banking, savings, payments and settlements, insurance, loans and credit and so on. Okay, so actually making the financial field leveled enough to engender wider participation. So really it's different from financial integration. So financial integration just involves offering the same products and services to wider segments in different geographies. Okay, same product and services to wider segments and just widening and the reach of the same products and services. But for financial inclusion, because that's an objective, is very different from financial integration. So it's about offering different tailor-made financial products and services to wider segments in different geographies. So it's more or less done after a needs assessment, because it's very important that the targeted customers, as regards the banked and unbanked, engaged. It's very important that these products and services are relevant to their lives. So this assessment is very, very important, so that the products and services are tailor-made so that they can engender the use, okay, by these targeted banked and unbanked customers. So the essence is to strive to expunge obstacles that exclude people from participating adequately in the financial sector, and it's all about enabling access to affordable, relevant, tailor-made and lives impacting products and services. So it's very, very important to understand that the opportunity to use financial services as when needed, is available. Okay, very, very important. That must be present. Okay, that opportunity to use financial services as when needed as when needed is available. Talking about access and the costs too. The cost, talking about affordability, the cost of the financial products and services should be reasonable, should be competitive, and within the reach of the target customers, the targets banked and underbanked. I beg your pardon, the targeted unbanked and underbanked. Okay, underbanked, talking about people that are not adequately banked. Okay, they are banked. The level of their banking is actually below their level of activities, economic engagement. So, okay, and they rely more on the informal systems. Okay, for payments and settlements. So important also for financial institutions to provide services responsibly and sustainably. Okay, ethics, very, very important. All right, so not just any kind of product. Okay, but the products that are not unethical, products that do not incite negativity, and products that banking sector will definitely bring about. All right, will definitely enhance. Talking about economic growth. All right, because